Hey everyone, it's Evan here from the Trade Risk on Tuesday, January 9th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off with some sector analysis. We're going to jump right into the charts here with the S&P 500, the SPY ETF. You can see we closed up 61 cents on Tuesday here. That's good for almost 1/4% to the upside, although closing well off of the highs of the day for Tuesday. But before we take a look at that daily chart, let's look at the weekly here and notice, we are making new weekly highs again. We are continuing getting some follow through from last week's expansion in range. That first opening week of trading was a big one for the bulls to the upside, really accelerating this longer term trend. And so far we're tacking on some gains, but overall momentum continues to build here. The trend remains strong. We're getting a bit stretched away from this 8-period EMA. So again, thinking about this on a weekly time frame, the S&P 500 markets tend to not like to stay too far away from some of these fast moving averages before we get a little bit of consolidation. Pretty much every time, look at something like this back in March where we get a little bit extended away, then we just spent some time kind of pulling back, and in this case a couple of months, but it doesn't necessarily have to be that long. It could look something like this here at the end of October when we started to get a little bit extended away, and then we just needed some time to cool off and lift up again. So the longer term time frame is very much in control there by the bulls still. Nothing changed. That's the same MO you've been hearing me say for the past many months. When we look at the daily chart, maybe something a bit more actionable here, especially for you active traders. What you'll notice here, and I don't have Bollinger Bands on my chart, but we are above the standard sort of 2 and 20 Bollinger Band for the S&P 500, and we do have a bit of a sort of early price action indication that maybe we're a little extended up here. We're above the upper Bollinger Band. This, I think, to many people, maybe some active traders would be looking at this as an early entry sort of short signal. There's no follow through yet. Again, you're basically betting against this longer term trend here, which equally has a lot of momentum behind it, making new momentum highs, I believe, today on the daily chart here as well for the S&P 500. So it is a counter trend trade. It's an aggressive trade in my book, but it's something that, sure, if you want to play for a move down to, say, 272, try and capture a couple of points, hedge up a portfolio, depending on your strategy, I think you could get some different micro causes to maybe look at this as an opportunity to just protect yourself. For me, I always would defer to just lightening up general exposure. So trimming out some of your long positions or tightening up those stops, I think would be a prudent idea. But when we look at this, all things considered, and we look at what's gone on here, we've gone up every single day for 2018. We're up 6 days in a row here in fact, for potentially all of the major averages, depending on, okay, so the IWM did ruin that statistic. The Qs barely eked out a gain because we almost had the S&P 500, the Qs, and the Russell all up every single day for 6 days consecutive for 2018, but it looks like the Russell spoiled that statistic there. But nevertheless, the strength here is pretty clear. We are accelerated in the short term. Volume's been coming in. It's been just a hell of a move higher to start off the new year. Can we pull back? Absolutely. It would probably be healthy to do that sooner than later. And I think a retest of some of these moving averages, maybe even all the way down to 270 or so, that classic sort of 1 to 2 to 2.5% pullback, that's what we've been getting. That's the market environment that we've been dealt for the past eight or so months at least, really all of 2017. So, until proven otherwise, I think that is our base expectations. We do have earnings season starting pretty much, right away, right in front of us. So that will be, something to pay attention to. Watch how markets start to react to companies and their guidance, sectors on a sector by sector basis. I think that'll be interesting to get the mood of how the market's reacting, given where it is, given that it's at these all-time highs here. Can it, does the news sort of justify these prices, or is there some type of price repricing that's going to come in, followed with a bigger retracement, for example? So that's basically the landscape. Really, not a whole lot to say. It's markets at new highs. It's markets continuing to remain overbought. It's, again, not a reason by itself to to short markets, but I think if you're a technician here on the short-term time frames, again, looking at that above the upper standard 2 and 20 Bollinger Band with a little mini kind of price action signal here, maybe you get a couple of day pullback into some of these rising moving averages. That's, again, if you're real tactical. So that's the S&P 500. The big level that I'd be paying attention to is really down here around 267 or so, or really these highs up here right around 269. So until we start to fall about 5 or so points, that's about 2.5 or so percent. I really think the bulls are in control here, and I would rather be pricing or positioning to buy dips at this point and position long than aggressively get short. Again, that can change. Maybe we see a big change of character over the next week or two. That'll change my tune, but for now, that's my stance, and I'm sticking with it. The IWM, I think, is interesting. Maybe this is the canary here. I have been sort of mentioning this in the past couple of videos, certainly to my subscribers, that the action here, the way it acts at these prior highs, is something that I'm paying close attention to. Notice when we look at sort of 2018's action, we've seen the Qs run away to the upside. We've seen the S&P, even the Dow has run away to the upside, but the small caps, yes, we made some new marginal highs, but still we are basically at the highs here from December the 4th of 2017. So it doesn't have to be a bear, it's not necessarily a apocalyptic scenario or situation that we haven't quite ran away here in the small caps, but it's just something to take notice that they are a bit reluctant. Today's price action ending red and kind of failing off of these highs speaks to that, and I still think this is something I talked about in Friday's video, in our last weekend video on Friday, was that if we got an abrupt failure here and we saw a sharp rejection lower, something that almost what we looked like yesterday morning and Monday morning here in the small caps, you could see we already, we traded all the way down sub 154, but then we saw a big price reversal. If we see that type of action where we actually get a convincing close with an uptick in volume back into this range here, I think that would certainly put a damper on this bull rally that we've been seeing so far for 2018. That's something I'm paying attention to. So I'm watching the IWM. I'd still say it's an innocent until proven guilty type of market here, just given it's got all of the short and intermediate term moving averages now below price and supporting this move higher. So rotation might be the more likely scenario, but if we do get that abrupt failure, that would give me something to sort of update and maybe change my outlooks over the near term. So that's the Russell 2000. The NASDAQ 100, again, you can see just marginally eking out slightly, a penny higher today, but basically flat. But same principles here. We're up basically 6 days in a row. We're extended away in the short term from some of these moving averages, and a slight pullback here would not be the most bearish development, but so far bulls still very firmly in control. So that is the market environment overall. Let's take a look at some other major markets here. There's actually some good developments going on. TLT is one of them. You can see a breakdown, uptick in volume, taking out the lows here from mid-December when we came back down to this level, and suddenly we zoom out here and we take a look at the weekly chart, and again it is still extremely noisy here. I think this is just riddled with faking traders out inside of this range that we've been trading in since June effectively. But this is the big level for me, 123. I think breaking some meaningful support here would be meaningful, and that would really put the sellers in control. Even with this weekly candle here, take a look at those fast moving averages here on that weekly chart starting to curl back over. This could get ugly pretty fast if this unwind happens, but we've seen this story before. The magic bid tends to appear. We saw it back here in October. Really, all of these rejections down here as well led to sharp bounces higher. So we still need to see the proof of sellers really taking out a more meaningful level. That's what I'm waiting for, but certainly in the short term, bears are starting to take control here in the long bond TLT. If we go to USO, this uptrend continues, 1.5% to the upside. Nothing new here. We've been talking about this uptrend. The uptrend has persisted. It is extended here to the upside. Maybe needs a bit of a reset, but bulls very firmly in control. Natural gas up 5%, so a big day for natural gas. I think it's interesting. I think if you're active, if you're a tactical trader here, there's opportunity for UNG. I do think it's trying to carve out a bottom here. Some good volume is coming in. I like this amount of volume that's finally starting to appear. We saw lows get put in back in December. They weren't the highest volume, but we got this nice, this strong rip from $20, and again, this has now been recently adjusted for a reverse split, but $20 all the way up to $24. Then we got this pullback here. If this can be some type of higher low, the push today of 5%, maybe retarget these 2430 pivot high here that we just made as a next possible target, and then maybe we can continue to V-shape from there. But structurally, this still keeps me away from this type of trade right now. This weekly chart is still pretty horrendous looking, but I do respect sort of the very kind of increased volume here, the increased range, and the fact that we could have start to be capitulating and carving out some type of low. So I think active traders there, you're going to find some play over there for the next at least week or two, I think, in natural gas. Next, if we go to the metals, GLD is still staying pretty resilient. I mean, I think this was its biggest down day this year, and probably over the past 3 or so weeks, ever since kind of V-shaping off of this 117 level. So a little bit of a pullback here, I think, is interesting. If you recall, I like gold here, I like gold for a pullback. I like the premise of getting involved here on a reset. I don't quite see, this isn't the most convincing price action just yet for me to get involved, but I am paying attention to it. I'd like to see, I would really like to see a move down to say 122 or some type of higher low get put in, some structure get built, and then maybe get involved for a continued move to the upside. No trade just yet, but I am paying attention to it. And silver, pretty much the same exact thing. Don't like it as much, but same principles apply here. A little bit of a cool off, put in a higher low, and I think that starts to look pretty interesting. So those are the major markets. Let's take a look at some sectors here. I think financials first and foremost need to be addressed because we're starting to get this breakout above this range. It really happened to start off the year, or a little bit earlier in the year. It was a little bit sluggish, and then last Thursday we got this breakout. Wasn't the most convincing thing. We had a couple of inside days here, and once again now we're starting to break to the upside. So the bulls very lackluster at times, kind of waiting for the last moment, but that rotation comes into financials, it breaks us out, and then we go very sleepy sideways for a few days, and then we break out. So XLF bulls continuing to work. It was one of the leadership sectors today, trading at new highs here. So I think as long as you're above this recent consolidation up here, I think the bulls again in control and heading higher. What else? Industrials. So XLI has really been getting pretty accelerated here. Take a look, and this one, hasn't really even paused or put in any meaningful consolidation. This really started from basically right before Thanksgiving in 2017, where it started to go off to the races. It had this brief kind of wide range consolidation here, and then it's just been kind of grinding higher, and then it's recently been accelerating higher this year. So good volume coming in. It is overextended. I couldn't justify necessarily buying into it right here, but again, on pullbacks would be something that's interesting to me. It'd be trailing profits and raising stops where appropriate, but bulls very much in control there for industrials. Materials, similar in the analysis here, where it's really accelerated higher, but note again today with the outside sort of reversal day where we popped up to new highs, we failed, we went red, and we closed near the lows. It's not a good short-term signal, but again, I think it stands constructive to come back down for a couple of days, maybe retest some of these moving averages into the 61, 62 area. I think that would be healthy. I think you should be looking at that as an opportunity, not necessarily as an aggressive, short in the hole or continue to just hammer away at this on the short side. What else do we have? IYT continues to work pretty well here. You can see again closing at highs, maybe again a little bit extended, but still looks pretty strong. IBB I think was interesting today. This was a pretty sharp reversal. We saw this really in the smaller cap biotech as well. It was the past 3 or so days, Thursday, Friday, and yesterday, biotechs had pulled back. Healthcare had kind of pulled back in general. Actually, it was pretty contained to biotech, I think. And today we saw a nice reversal at some of these moving averages. So I think the bulls defended sort of exactly where they needed to. IBB is still off of the highs, but you can see trying to get back to them now. So this trend in the short term still remains higher. That healthcare I just mentioned there, you can see is a little more bullish here on a broad-based healthcare XLV ETF. And again, that weekly chart, which we flagged in last Friday's video as being a bullish development here on this breakout sector to pay attention to be allocated to. And so far this week, it has been working. So healthcare, biotech, those are strong. Semiconductors a bit down today, underperforming on a relative basis. You can see we were trying to get back up to these prior highs. I think what's interesting about semiconductors here is that if this turns out, and it's super early to say this, but if this turns out to be a lower high, that could be a meaningful a meaningful development in this market. So in other words, we have a high here that was made in mid-November, and if the semiconductors do end up rolling over here, then we do have what could be in place a start of a trend to the downside. Lower highs, lower lows. Again, really early to be calling that. Just kind of looking at that as a longer term scenario. For now, the bulls are still in control. I would not put that trade on myself, but it's something to just keep in the back of your mind. So that's semiconductors. And on the laggards here, utilities continue to get beat up here, especially as what we saw with TLT. All the rate-sensitive sectors, XLU, IYR, these all continue to be in sort of a mini bear trend here on the short to intermediate term, and sellers remain very much in control. So that's what I have for today on Tuesday's midweek video. Hopefully you guys are doing well out there. Again, if you like these videos, do subscribe to our YouTube channel to keep up to date with the several a week that we publish. And as always, thank you so much for watching, and talk to you on Friday.